Hello, everybody. Welcome to our SustainSurf webinar. We wait for another 1 minute or two as we have many participants and expect them coming in any second. Thank you. So let's start. Hello, everybody. I welcome you to our SustainSurf webinar, SBTi 2.0, Rethinking Corporate Climate Strategy for a Net Zero Future. My name is Stefan Linin. I'm co-founder and managing partner of SustainSurf. I'm doing this webinar together with two main speakers. That's Robert Büttler, from our Zurich office, and Fernando Villasana, a senior advisor of us currently speaking to us out of Mexico. I'm pleased we have lots of interest in this webinar, mainly participants from the Swiss market, but also from Germany, the US, and other countries. So it's certainly an international topic, and we try to fulfill your expectations in to understand this topic better. Robert, can you go to the next slide, please? Our goal today is that you get more clarity on SBTi 2.0, which is the new draft guideline of the Science-Based Targets Initiative, and that you get more clarity on its implications for your company. Next slide. We try to do it this way. I'll very quickly say a few words on us so that you have an understanding where we're coming from, our perspective on it. I will continue with a few introductory comments. Then Robert will present the facts. What do we know on the new draft by SBTi, and explain the rather complex paper. Fernando will react to that and give us a little bit, what does it mean? What does it mean in the big picture? And in the end, we would like to go more into the action and talk about the climate transition plan, which we think is an important instrument, also even pushed more by Science-Based Target as well. And we will finalize the webinar with a few questions and discussion, depending on whether you have questions, which I assume you have. Next slide, please. First, I think your microphones are automatically muted, so that we will be in presentation mode through the whole webinar. Please be sure slides and comments, depending on questions, will be sent to you in the next days. And for questions, please use the chat room, and if possible, add your name to the question. If we do not have a chance to answer all questions in this webinar, then we still have the chance to contact you individually. Thank you. A few words on SustainSurf. I see many familiar faces within the participants, but also new ones. We have been sustainability experts for more than 23 years now, basically operating out of Zurich, Frankfurt, and the US. Currently with 35 people. We are certainly still a boutique consultant, and we have grown considerably in the last 20 years as focusing also on many reporting standards, but that's not the only thing we do. Next slide, please. We focus on a whole variety of sustainability services, mainly with a part one focus and strategy. What is important for you in sustainability? We help you to implement and monitor measures and actions. And as I said, we also offer all kinds of reporting and communication solutions. May I introduce next slide, Robert. Robert has been about 4 years with SustainSurf. He's leading our Zurich team as a manager, but he's also deeply involved in anything climate and has been involved in many projects concerning science-based targets for our clients. He will lead you later on through SBT 2.0. I'm especially pleased, next slide please, that Fernando Villasana joins us. He is a senior advisor of SustainSurf starting from the beginning of this year. And I have to say, Fernando is really a deep down expert on anything GHG accounting, net zero transition strategies, and so on. He has been with SBTi for more than 8 years, leading a couple of developments there, and has now decided to go another way, but certainly you will profit from his deep insight into science-based targets and climate goals and anything related to it. Next slide, please. And we can just stump a few comments. I think all of you know what science-based targets is. We have written it down here again for those who might look for a definition, but it's very clear. The science-based targets basically translate the global 1.5 degree ambition into corporate level goals. And it started about more than 10 years ago by a couple of NGOs partnering up. Certainly, there has been a develop to form a global standard as it became popular and more successful than probably most people had expected. But yeah, that's part of the development, the journey of SBTi. Next slide, please. This is a rather old slide from SBTi. I think it's still valid in a sense that the core idea of SBTi is relatively simple, and that's sometimes forgotten with all of its complexity when you read the guidelines these days. It's basically from science, we know the climate scenarios to stay below 1.5 degree global warming. That gives us basically a global budget, a global carbon budget. And so to speak, SBTi has developed a simplified setup of bookkeeping to then analyze what's my share of this budget, how much are we allowed to emit now, the coming years and in the future. So the core idea is relatively simple. I think together with the GHG protocol and lots of criteria also for different sectors, it certainly did not become an easy topic, but is a challenge for all of us in the community. But next slide, it's certainly the leading standard in this area and has not much competition, if at all. That might be part of the discussion. You see current numbers where global commitments have basically gone over 10,000 commitments starting end of last year. You see, for example, in Switzerland, it's a pretty similar curve, of course, with much less absolute numbers. Yeah, because it's Switzerland. And so, but it's the same kind of dynamics you see. And I think, yeah, because it's kind of a leading standard, but it came out of an NGO initiative, there's certainly a few problems and critique. Next slide, please. It has always been a little bit in the center of critique from different sides. But nevertheless, we appreciate what we have, and we at SustainServe try our best to be pragmatic about it and help our clients to, if there's an interest, to do the best and get a real setup of targets and actions together. I keep this slide short because Fernando in his section will comment on a few big picture aspects of SBTi. And I hand over to you, Robert, to explain and summarize us what is basically in the new draft.
Yes, thank you, Stefan, for the introduction. Also a warm welcome to everyone from my side as well. Looking forward to giving you an introduction to SBTi 2.0 and its implications for your company. So as we have heard and seen in the graph, SBTi has over 10,000 companies that currently have SBTi targets aligned with the 1.5 degree goal. Nonetheless, the time of easy commitments, in a sense, is over. And as Stefan has mentioned, there is an ever-increasing focus rather on the action, the roadmap. How do you actually get to these targets rather than just having the targets validated by SBTi and be done with it? SBTi released a draft version of its corporate net zero standard version 2.0, succeeding the previous one, 1.2, and increasing the or putting focus on accountability and requiring companies to actually put measurable progress into perspective rather than just, as mentioned, focusing on target setting and the baseline greenhouse gas emissions. Yes, so I quickly want to mention or raise awareness for the link that we put there. We also have an article on our website that guides you through the news of SBTi 2.0, so feel free to check that out after the webinar as well. Moving on to the timeline, here I want to focus rather on the process of the development. So we are aware of March 18th when the initial draft of SBTi 2.0 was published. We are now in the consultation process. So the public consultation ended on June 1st. It is also expected that on August 15th, the pilot testing will end and that the final version of the draft will become public in Q2 2026. It is intended that the SBTi 2.0 will be relevant for companies from 2027 onwards to set new term and long-term targets according to the new standard. And I quickly want to mention as well that with companies having existing targets, it is expected that those remain valid either until 2030 or until the end of the target timeframe, if this time should be between 27 and 2030. So moving on, we dive right in. The first relevant aspect that SBTi 2.0 introduces is a two-tiered approach. So some of you may be familiar with this first dimension that SBTi mentions, which is the company size. Those share some similarities with the CSRD thresholds that some of you may be familiar with, so number of employees, annual turnover, balance sheet, and so on, which then define whether you are a large, medium, or small company. SBTi adds the company location to then decide whether you are deemed a category A company or a category B company. And as you can see, for medium-sized companies, there are additional thresholds which then decide whether you fall into category A classification or a category B classification. It is important to note this difference since SBTi introduced in the CNCS 2.0. Not all changes for category D companies. For example, climate transition plan and the assurance of the greenhouse gas balance are an optional requirement. So in the following slides, we will focus on category A companies. Just want to raise awareness for that. Then navigating the impacts of SBTi 2.0. This should rather be a bit of an overview. So previously, SBTi focused on assessing base year performance and the target setting during its validation phase. They now come full circle and also start with the public net zero commitment that is required, that your company is required to have when validating for SBTi 2.0. They also close the loop with addressing ongoing emissions and the communication of progress, and also all the claims coming with this circle for you as a company. So in a sense, they expanded the accountability. They try to increase effectiveness of value chain decarbonization over scope 1, 2, and 3, and introduce the strategic planning aspect with the before mentioned net zero or climate transition plan. But as mentioned before, also are aware of implementation challenges, meaning that they grant flexibility to smaller firms to not be held accountable for all these steps directly in a mandatory way. So to start with, I quickly want to mention a few general updates that SBTi made to the CNCS 2.0. So they did, on one side, obviously change into a new rule of SBTi, but also revamp the commitment, submission, and validation phase. And there are several key aspects to it. Nonetheless, what I want to point out is, for example, the public commitment. So previously, in the prior version, you had 2 years from the commitment date to the deadline of the target submission for validation. This was now decreased to 12 months. And also the introduction of the climate transition plan, where you just needed to add a high-level commentary on the reduction strategy in the previous submission form, and now within 1 year of your validation, you need to develop a climate transition plan and make that publicly available. And I think this shows, in a sense, that time is of essence, and that to reduce emissions, and these stricter requirements of SBTi go hand in hand with that. Diving a bit deeper into the topics, we start with scope 1. So SBTi 2.0 actually puts more emphasis on effective carbon mitigation. So combined scope 1, 2 targets are no longer accepted. You need to have a separate scope 1 target. And with this separate scope 1 target, there is also the update of the absolute contraction method coming, which now is proposed to account also for historical performance. So what SBTi proposed in SBTi 2.0 is that there are 2 options, which now, as part of the consultation phase, will likely be defined into 1, but at the moment there is option 1, the budget conserving contraction approach, which actually focuses on year-to-year emission reduction, compared to the option 2, the linear contraction approach, which where the ambition of net zero 100% by 2050 as an ensured outcome for companies is in focus, and it's actually more simplistic compared to option one. On a side note, also the methods and model within SBTi were updated with the new IPCC assessment report 6 content and IEA NC net zero emission scenarios. Moving on to scope 2, combined scope 1, 2 targets no longer accepted. You now need to have 2 separate scope 2 targets. In the prior version, you were able to either have one location or a market-based target. Now you need to have a location-based target and a market-based or zero carbon electricity target. Quickly want to point out that we're talking about zero carbon and not renewable electricity targets. So, for example, nuclear can be accounted for in this zero carbon electricity target. Environmental attribute certificates, so carbon credits, energy and commodity certificates. At the moment, SBTi proposes that also indirect sourcing from other grids is okay. Nonetheless, they tend to move towards a time and spatial matching of both consumption and production. Scope 3 is a bit more thorough in a sense of that this still is accepted or recognized by SBTi as the big lever in the private sector, where emissions actually lay. And I also want to raise awareness for these question marks. This graph is taken directly from the Science-Based Targets document. So there are still a few question marks coming with it. Nonetheless, I want to quickly guide you through the target boundary, the target setting, and the mitigation measures in this graph as the key changes to scope 3. So considering target boundary, we previously in the prior version had these 67% threshold for near-term targets of scope 3 emissions and 90% for long-term. This now changed to a significance level of 5%. So if you have a scope 3 category that contributes more than 5% to the total scope 3 emissions, this directly falls into the target boundary. Additionally, they introduced the emission-intensive activities, meaning that for all activities according to an SBTi list of EIAs, if this activity contributes more than 1% to the total of scope 3 emissions or is actually bigger than 10,000 tons of CO2, it needs to be accounted for as well. That brings us to the target setting, and there SBTi introduces now 2 different approaches with engagement targets and mitigation targets. So supply engagement targets and mitigation targets regarding absolute and intensity targets are fairly known to the most of you. Nonetheless, SBTi also puts greater emphasis on non-emission metrics, meaning that they introduced alignment mitigation targets where, for example, a KPI such as the percentage of net zero aligned procurement or the percentage of revenue derived from net zero aligned activities can also be used as a mitigation target. For deployment of mitigation measures, SBTi acknowledges the challenges of scope 3 accounting and target setting and introduced new options as well. So we have the well-known traceable emission sources with measures in the considering the spend-based approach and activity-based based on activity-based metrics. And now they also introduced activity pools and book and claim systems. So what that means is that, for example, a company doesn't know directly where they source their car seats from, but have some sort of physical connectedness with this activity pool or so-called supply shed, where they have some general information about region and group, and then can account for that in this regard. Book and claim systems or indirect mitigation in a sense is also proposed, where you have an actual decoupling of the environmental benefit that is claimed, but not physically linked to the company's own operations. And this can be maybe put best to reference with commodity certificates like steel or cement at the moment. So moving on to the next big topic, SBTi, residual emissions removals and beyond value chain mitigation. The topic of neutralizing all residual emissions is quite familiar, but removals are now here introduced as well, and within 3 different options. So option 1 proposed by SBTi in its new standard would be to have mandatory removal targets. Option B or option 2 would be to have optional recognition for abatement or removal targets at the time of net zero target year. And there is a third flexible approach where removals are not required, but ongoing emissions can be addressed through abatement or removal. And this brings us to the next point, the minimum durability requirements, meaning that there is a requirement for either this gradual transition over time to higher durability removals, meaning that you actually start with the first one available, but not at the time of the net zero target year, but rather prior, and then head towards higher durability removals, or that there is the like-for-like approach where you have a matching of durability of removals to the residual greenhouse gas emissions. So for example, fossil fuel emissions need to be captured and long-term stored in a sense of carbon capture and storage. Beyond value chain mitigations is about claims, so carbon credits, financing, reforestation, for example, unrelated company activities are now proposed to be recognized. This brings me to the key takeaways of the SBTi 2.0 section. Evaluate your current climate strategies against 2.0 requirements. It is complex, so try to understand with help also the SBTi 2.0 requirements, leverage your expertise, but also make use of your current knowledge of SBTi 1.2 that is currently out there and being used since it builds up on that. Establish mechanisms for monitoring progress, as mentioned before, climate transition plan, big topic, and also then in the end develop a roadmap for actually approaching these SBTi 2 commitment, submission and validation phases. Fernando, I hand over to you.
Yeah, maybe just to as a moderator quickly, I get, or probably you get by now, that the draft itself is technically already quite complex and will need further digestion. Certainly, it's also only a draft, as Robert described in the process overview, but nevertheless, I think we can be relatively sure that many things will prevail and will be valid starting from 2027 and so on. And that's why Fernando has the pleasure now to summarize a little bit what does it mean in the bigger picture. And I'm sure you have some insights for us there. Fernando, you're on mute.
Apologies for that. I was just saying thank you, Robert, for that summary of all these elements that have changed. And thank you, Stefan. It's a pleasure to have the opportunity to present alongside you and Robert. If we could go to the next slide, please. Well, as Stefan mentioned, I have a bit of a history working for the SBTi, and I was thinking about starting this section by sharing my perspective on the for the past decade. Perhaps a little known fact is that this all started back in 2013 with a small group of climate experts that a concept called the GHG reduction called for by science. Name that we have now, but they're simple one way to incentivize non-state climate action and to mobilize corporates ahead of COP15 in Paris. So essentially, after those initial discussions, 2 years later, and with the endorsement of a few dozen pioneering companies, the SBTi was launched in August 2015, if I remember correctly. As with most startups, the initiative faced a steep learning curve. Find that the core of people, and yes, it is, but making it actionable was far from easy. A number of technical criteria needed to evolve. Multiple greenhouse gas accounting practices needed solving because they were not designed for the purpose of target setting precisely. More sector guidance was needed. And there was pressure from many stakeholders. Some stakeholders pushed to increase minimum ambition, which eventually actually went up from 2 degrees to well below 2 degrees. Stakeholders just kept pushing for pragmatism and flexibility, which are still important, even if this is a science-based initiative. Plus, over time, with a growing volume of commitments, the SBTi needed to professionalize its target validation service, and it needed to figure out how to boost SBTi uptake outside of the usual suspects like US and Europe, because that's always been an issue. For this to work, there has to be companies adopting also in Asia, Latin America, and Africa. But fortunately, thanks to that initial founding organizations, and thanks in part to the complementarity of SBTs with Greenhouse Gas Protocol and the CDP disclosure platform, the SBT found a role and a niche for itself in the climate ecosystem. After navigating this decade of multiple challenges, including operational challenges, technical function challenges, and even some governance issues, the SBTi thought to become its own independent organization and started rethinking the delivery model for its mission. So moving past an NGO campaign or a call to action into a standard setter. Actually, I guess it's now the leading global standard setter for corporate climate action. And that sets the stage for this new net zero standard that Robert just walked us through. After being part of the initiative from 2016 to 2024, I definitely and very confidently can say that this is the most substantial and comprehensive set of changes made to the SBTi framework in its history. And in the next slides, we will explore some of these key implications of the new framework for companies. Next slide, please. So again, as you heard from Robert, the new standard brings several changes over the previous version, with the main one being that we are about to enter a phase where companies must not just adopt ambitious targets or 1.5 degree aligned targets. They really have to demonstrate how they will get there and justify any shortfalls that happen, as we know, along the way. And this is where the new standard very quietly, but also quite significantly, will reshape the climate landscape. Under this new framework, the term net zero target is just not longer about setting a right number, an X% reduction by this date. This will be about the building trust within our stakeholders that targets will be delivered. This new standard introduces also a more rigorous approach to delivery claims. which by that I mean announcements around progress and achievement, which was largely absent within the initiative since it started only as a target setting campaign. As far as I recall, the target timeframes were far out enough that by the time that the initiative had not figured out yet how it would validate or better yet verify any claims over achieving of those targets. So this new focus on claims puts a spotlight on what really counts as real and credible decarbonization. And it opens up a discussion about these new approaches for Scope 3, about removals, which have been on the table for a while since the net zero standard was launched initially. And it also puts on the table discussions around market instruments. So if I was to summarize what this means is that SBTs are not longer just goalposts. They have become, or they will become, part of a company's governance. In the next slide, we're going to see that this, well, previously Robert commented on the two-tiered approach with differentiated requirements per company size and also by location. And this was partly to address feedback over the lack of climate equity considerations and to improve adoption outside of Europe and North America. But regardless if companies are in category A or B, they all face a very new, ambitious, and very rigorous framework. And so we need to ask ourselves, who is this going to be for? This new standard is designed for companies with a very clear net zero intent, and which ideally are on track with their climate commitments, because it will require advanced planning. As I mentioned, changes to the governance structure, and also a lot of focus on disclosures. So let's not make any mistakes here. The new standard sets a really high bar for credibility, but it comes at the cost of more requirements for addressing residual emissions, looking into removals, and also engaging with these renewal validation cycles. It offers a roadmap to improving your climate strategy, and it includes very valuable elements that every company can benefit from, such as the option for this is a recommendation, but it's optional climate contribution guidance through BBCM. It introduces or enforces the concept of performance monitoring, and very importantly, encourages transition plan development. The downsides include that with the short renewal validation cycles, with the third-party assurance, and also all the additional resources and efforts required for the performance monitoring, that may prove to be an operational and even financial burden for companies. So, in my opinion, the new standard is not going to be for every company out there, but certainly every company can benefit from integrating these elements into their climate strategies. Moving along to the next slide, we're going to talk about one of the most important topics that have been the crux of companies and also from the SBTi technical team alike, which is Scope 3. As we are all aware, most Scope 3 inventories today are built on spend data on industry averages or some other high-level assumptions, and that has been okay as a starting point. But using this secondary data just limits how useful the inventory estimates really are for your decarbonization plans. We all know that setting targets is relatively easy using the absolute contraction approach, but when it comes down to demonstrating any progress, the use of secondary data or spend data, it's a big obstacle. The new standard invites companies to take a more forward-looking view, which is using these alignment indicators to assess where suppliers or partners are heading. For example, are they setting SBTs? Are they disclosing their emissions? Does their products and service offering aligns with an ambitious pathway or benchmark? And these are the alignment metrics that Robert was explaining. Do any of our suppliers already have a transition plan? So this shifts the focus from trying to perfect every corner of your inventory and instead ask some more strategic questions about who in your value chain is moving in with you towards net zero, who is lagging behind, and this is all through the use of alignment metrics. Imagine that instead of just estimating emissions, you start tracking behaviors like who's adopting clean transport, or what percent of my procurement is considered low carbon, who is making capital investments in line with 1.5. And in practice, I see these indicators helping as proxy key performance indicators for your value chain decarbonization. These indicators can help you also with segmentation and can help you prioritize key suppliers or logistics partners where you can actually define better procurement standards or offer incentives to those that are demonstrating alignment. Ultimately, companies are struggling to influence their Scope 3 emissions directly will be able to start pushing for change through alignment even before their emissions data is perfect or is moving away from spend-based into some high-quality calculation. So in time, this will help make your Scope 3 strategy more proactive, more transparent, more credible, and perhaps it'll help you find opportunities for collaboration more easily, for collaborations more easily than just being just keeping an eye on the emissions levels. So in the next slide, we're also going to talk about another complicated and recurrent issue within the SBTi, at least in my personal experience. You probably heard that a lot has been written and voiced in support and against carbon credits, with several high-profile stakeholders voicing opinions on either side. And lately, there was a little bit of a confusing statement that appeared in a Wall Street Journal interview with the SBTi's new CEO, Mr. David Kennedy, and he suggested companies should be able to use carbon credits to meet their targets, which has been a big no-no since the founding of the initiative. The Wall Street Journal quoted him as saying companies that fall short of their targets should be able to purchase high-integrity credits to fulfill goals. And this message is actually very important because it touches on what counts towards a target and what credible means companies should focus on for making these target-related claims. So the what counts is extremely important when you are going to make a claim around achieving X amount of progress or actually fully achieving your target. Was it all reductions, or were there other elements that are credible enough to back up that claim? Even the claims of reaching a net zero state would depend on what counts, not just what's required. And while this quote doesn't exactly match what is written in the draft standard, I do trust that the SBTi will clarify this further in the next iteration that's released to the public. In the next slide, I want to discuss quickly all three cases mentioned it in the article and compared to what the standard actually says. Well, first case is if a company falls short of its Scope 1 target, the proposed criteria allows companies to make that make up for that gap with permanent carbon removals. That's the exact wording in the standard, not by using generic offsets. And this, of course, would only apply to companies already adopting SBTi 2.0 and within the renewal validation cycle, or that would be the current interpretation because it has not been deemed retroactive to version 1.2. So in terms of fact checking, unfortunately, credits are not explicitly allowed for target shortfalls or under delivery of targets. The second one is that companies may purchase high quality credits for addressing their so-called ongoing emissions. So those are emissions that continue to happen over the target time frame, even if companies reduce emissions. So this is essentially the emissions that still occur even if a company is delivering on its target. And again, there is a chance to now explicitly in the standard, there is a chance to apply credits towards those ongoing emissions. It's actually recommended, but it doesn't change at all what the SBTi official position has been since 2015. Credits only count above and beyond SBTs. So this is consistent with that position. No change has happened, and yes, credits would be allowed for that. The third element to unpack here is that to achieve net zero, residual emissions have to be neutralized with actual removals. And Robert covered three options to do that. One of them is removal credits, but again, there is no room for avoidance or reduction credits here. So fact checking, only removal credits would be allowed. The bottom line here is that these distinctions matter a lot for the sake of transparency and credibility of your target. And that is why it's important to review the standard and criteria very carefully before considering offsets as part of your climate strategy. Next, please. So what do we do? The standard is not out yet, and many companies would probably figuring what should they be doing right now. Well, my first recommendation is to figure out if your company would be ready for the renewal validation cycle, which is this mechanism that holds companies accountable to their targets over time through a series of fixed target validation intervals. This is the recurrent target cycle that is proposed at 5-year intervals, plus 1 year for data gathering and another year for validation. But all in all, it's a fixed validation interval in which companies will have a much shorter target time frame, and that can be challenging. Part of this readiness assessment includes ensuring that your inventory is obviously robust and reliable enough, and already identifying potential alignment metrics. And I think this is even more important than considering third-party assurance. You should definitely look into improving your inventory to a certain extent, and relying or identifying which are the alignment metrics that will help you effectively monitor or keep a finger on the pulse on your main activities and main categories. Second, companies need to make sure that the strategic priority continues to be deep reductions across your value chain. These carbon credits will have a role, but they won't replace all that you need to do inside your inventory boundary. And another point related to this one is that you should definitely clarify any messaging around carbon credits, because voluntary contributions are definitely encouraged, but claiming them towards your target achievement can backfire reputationally, unless they actually qualify in the rules. So again, we need to review carefully criteria and eligibility of every single market instrument that we want to apply. And finally, companies should expect a big shift towards this mandatory climate transition planning. A number of stakeholders are interested in this. It's also relevant for financial disclosures, and it's essential to have whether you remain in the SBTi 1.2 or move forward to SBTi 2.0. But this is actually a topic where my colleague Robert will take us next in the next section. So with that, I hand over to you, Robert. Thank you.
Thank you. Then let's get right to it. Fernando, you mentioned the comprehensive and holistic approach that companies now face. So climate transition plans, in a sense, are there to help exactly exploiting that. So I quickly want to point out that in its core, climate transition plan is actually quite simple. So you have a roadmap that covers your base year emissions, you have your target year emissions, and the whole roadmap is built around the question, how will my company reach its climate targets? So it is, in a sense, an action plan, an analysis and documentation of these measures, and should be best embedded into the business strategy and the governance within the company. So it provides a clear and measurable target or targets and actionable strategies. It aligns long-term net zero planning with credible intermediary goals or targets, and establishes also, in addition to that, the robust accountability mechanisms to track this progress on where the company is standing at any point. So as Fernando has teased, it also responds in a sense to not only evolving regulatory requirements, but also investor expectations and, as mentioned before, scientific advancements too. Bringing it back to SBTi 2.0, there are several CTP, climate transition plan requirements, that I quickly want to go through. So it should outline specific topics such as governance actions, policies, and resources. Needs to be made publicly available within the first 12 months after the initial validation, and also should support the company on its track or path towards net zero by 2050. Additionally, SBTi 2.0 wants you to approve the CTP by the board of directors in most cases, and review it every 5 years with the corresponding updates where necessary. SBTi, fortunately, gives a few disclosure frameworks that are mentioned here, where a company can align themselves with, and which we dive into next. Please be aware that this isn't a finite list, but rather the disclosure frameworks mentioned by SBTi. One of which is the Task Force for Transition Planning, the TPT disclosure framework. There are also several other documentations that you may have come across, which align in most cases quite well with what you see here. So for example, CDP has its own recommendations of key elements, CSRD has its own recommendations of key elements, and there are several interoperability documents that actually can be used to make sense of what SBTi requires for a transition plan and what other regulations and frameworks require for their transition plan. Nonetheless, quickly diving into the TPT disclosure framework here. So it all starts with setting the foundation, so target and priorities, strategic ambition, business strategy changes, and time frame need to be considered of the general business strategy. And this climate transition plan should, in a sense, also be underpinned with robust scenario analysis used to identify potential climate-related risks and opportunities. Moving on to the two action items, implementation and engagement strategy. So this is rather this hotspot analysis where you have this definition of measures in all areas that can be supported with a cost-benefit analysis, a stakeholder dialogue, a scenario analysis, as well as leading then up to the reduction potential and goals for each of these areas, meaning actions related to, for example, business operations, so production processes, changes in portfolio of products, and policies such as energy usage, but also considering financial planning, so capital expenditure projections aligned with climate goals and revenue projections from low carbon products and services, combined with the engagement along the value chain with all relevant stakeholders. Accountability, metrics and targets, quite familiar with that in most cases, since they drive and monitor progress, should be reported annually. Also on targets, for each target, you should also describe methodology, so metric used, objective, scope, time frame, base period, and so on and so forth. And last but not least, governance, so board level oversight and accountability for the climate transition plan, also executive management responsibility for developing and implementing the transition plan, and last mentioned executive incentives linked to these climate performance indicators down here.
Mm-hmm.
So again, bring it back to the key elements of taking action. Understanding investor and key stakeholders is key. Also assess your current transition planning practices against frameworks such as the TPT, identify the gaps, build internal capacity and integrate transition planning into the governance, into your governance, and begin disclosing your transition plan, not only for specific frameworks, but also for all your other stakeholders that you're confronted with as well.
Okay, thanks for that. We have 5 minutes left. We might have a little bit longer if you want to stay. I just want to say we have a couple of questions. You can be sure if the question is not answered yet, we send you together with the slides an answer directly. But a few questions we should address quickly. One is, I think if you already have SBTi validated goals, what is your planning security? I think it's fair to say you have planning security till 2030. So you are not forced to basically implement the new SBTi 2.0 right away. There's a certain transfer to that. There will even be a guidance for companies for that. Fernando, I think it's fair to say that companies who already have validated goals set, for example, until 2030, they have some planning security, but for sure they should obviously get familiar with the new system. That's probably fair to say, correct?
That's correct. Yeah, they should start anticipating, but no targets under the current version will be disavowed before 2030 or the end of their target period if it happens before then. Yeah.
Then the main question is obviously if a company is seriously interested in doing SBTi, as far as we understand, you can still apply along the current system for a while and get some goals validated next year. Afterwards, you should apply the new system. I mean, it's certainly a deadline end of next year where if the draft gets implemented, it's certainly a deadline where you should consider, do you still want to validate it with the current system or already apply the new systems? It certainly has pros and cons. I think it's fair to say that the current system is easier because it's more focused on commitment, targets, not so much on the validation, not so much on the whole process with which Robert and Fernando have described. It's probably a tricky question. Is it fair to say if you want to go the easiest way for the next year, then probably you should try to use the current system? Would you agree with that?
Yes, I would agree that it's interesting as a transition. If a company is only committing now, might be a good idea to join under the current version of the standard, and in meantime evaluate the readiness for version 2.
Yeah.
And if I may add to that, I think for me it's rather two sides of a medal, where you say on one side, obviously you may have the easy choice, committing and validating now. Nonetheless, as we have shown, there are other stake and shareholders, investors that may want you to actually have a climate transition plan ready. So I wouldn't solely rely on SBTi 1.2's requirements when considering actually developing a transition plan, but rather have a more holistic view about this topic in general.
It's now 5 o'clock. For all participants who have to leave, I thank you very much for your interest. As I said, you will get the slides and some information to most common questions sent by us personally. For those who want to stay in the call, we will have probably another 5 minutes to answer a few more questions. So if you're interested in, you're more than welcome to stay. One question is it correct that the renewal validation would be every 5 years? Is it already known what data will be needed for the renewable validation? Can that be answered from your side?
Yes, I can start, and Fernando, feel free to add to that. So it is correct that the new time frame for targets will be 5 years for near-term targets. So every 5 years, you need to enter the validation cycle again and set definitely new targets for your company. And this aligns with the circle graph that I've shown at the beginning, where they step away from actually just the target validation to rather this full circle approach, addressing ongoing emissions and also tracking progress towards these emissions.
Thank you. Another question is from Adriana Bichnow. If there is a need to make and that's a tricky question probably, if you already, that's my assumption, if you already have a SBT validated goal, but you have to make a rebaselining due to structural change, does SBT 2.0 has to be considered, or is it possible to just adjust based on the former version of SBTi? So the question behind that is probably if you have to restructure, are you forced into SBT 2.0, or can you stay to the old system? Fernando?
I'm going to volunteer here. As the initiative cannot yet validate under version 2.0, if there are significant changes because of structural changes in the boundary, triggering that 5% threshold for materiality threshold, yes, you do need to rebaselining, but your resubmission would still be considered under version 1.2. So there is no need, or actually there is not a chance right now to, I guess, upgrade or apply under the new framework, because it's only going to be valid until after Q2 2026.
Thank you. Christoph Müller asked, has a question, I think one beyond value chain mitigation, which I think was answered during your talk, Fernando, but we can come back to you, Christoph Müller, if it was not answered for you or you have more question on that. You have another one regarding the baseline year under 2.0. How far can it be back in the past, especially for scope 3? It's maybe one for you, Robert.
Yes, so in the old standard, you were allowed to use 2015 onwards as a base year. In the new standard, it is at most 3 years that you can go back for your baseline.
Mm-hmm. Thank you for that. I think there is no further question. I got one concerning climate reporting in Switzerland, and with that I close. And the question is, and maybe in the meantime, you can go to one slide we have there, Robert. I wanted.
That was one too far. Sorry.
And that will be the last slide.
Yeah. There you go.
Yeah. I wanted to comment to a question which was directly sent to me on whether how does the Swiss legislation and its call for climate transition plans compare to what SBTi now wants? And that's a question that's a slide actually of a seminar on climate reporting we gave recently. And it's, I think the overall conclusion is not only for Switzerland, but can be useful for any market. In the current situation where regulation change is on hold, is unclear, it's probably good to look out for things which are covered by almost all standards. And I think something like the climate transition plan or climate risks, they are covered by a number of standards out there. I mean, first, and in Switzerland, this is relevant, Swiss legislation asks for that. But then also in the ESRS, under the ESRE1 climate change, the standard for climate change, there are far-reaching requirements for climate transition plans and risks. They are certainly under discussion within the EU Omnibus, as most of you are very well aware. But the climate transition plan will stay a central tool and instrument. It's in another way very important as part of the ISSB standards, which might become much more important in the future. Under the IFRS S2 climate-related disclosures, there are obviously also elements where quite quantitative and also financial elements of such a climate transition plan are asked for. So that's another driver. Even GRI, which still many companies use in these times to fulfill, e.g., the Swiss law. There are, if you read it carefully, there is quite some demand also to be concrete and have something like a climate transition plan. So the SBT draft version right now fits very well into this landscape, and whatever happens exactly out there, it's probably a good idea to do a next step and prepare for a climate transition plan. By the way, this is also, in my understanding, a business necessity. If you have really ambitions, obviously you want to know how it costs and how you do it. That's also best business practice. With that, I close, and Just want to see whether there is a last important question. It was said that thank you for the answers. Just checking. Okay, with that, I close the webinar. I say thank you very much. Again, we have 18 people still in the call, so thanks also for some overtime interest. And you can count on us that we stay tuned. If you have questions, please contact us directly. We will send you the materials, and we are happy to prepare further insights in the future. Thank you.
Thank you, everyone.
Thank you, everyone.